Good morning, everyone. How you doing today? Michael Zuber, one rental at a time. Well, it is Wednesday. The big number of the week came out, and it was CPI, Consumer Price Index. It came in as expected at 7%. So I guess our over-unders neither worked because it came in on the number. Those that are curious how far back you have to go back 40 years to June of 1982. Yes, June of 1982 to have a CPI reading above 7%. Again, why is this important? Because again, I've shared with you that I think we are repeating the sins of the 70s. There's a 50-year spreadsheet, which I've talked about a bunch, that you can find in my free course or any of the other ones because I think it is that important. So we gave it away. Core CPI came in at 5.5%. That is the highest since February of 1991. A couple of things I want to talk about. Again, I believe we are in a wage cycle inflation. I believe most people, when you look at the sections of the economy, will see wage increases, although many of them, unfortunately, the ones that can least afford it, actually will see perhaps negative real wages. Let me explain the difference. There's a lot of numbers when you come to statistics or economics. So first up, this month, wages were up 0.6%. 0.6, that's the first number to remember. If you are an employee, that might feel good. However, we did just show a month-on-month inflation increase of 0.5%. So what you will call real wage growth, which is wages minus inflation, was really only 0.1%. Here's the rub. Wages on a month-on-month basis are interesting. There's a trend you can watch. But in reality, you and I care about yearly numbers when it comes to wages. So here's the unfortunate truth. Remember, wages minus inflation equals real wage growth. Real wage growth year on year is negative 2.4%. So, for example, what are we saying? Inflation's CPI is up 7%. That means wages are up 4.6%, a la negative real wage growth. This is what I've been telling you. This is why I think a lot of the numbers that are re-reported from Q4 will be a head fake. Because again, yes, nominal wages are up 4.6%, but the real wage growth is negative, which is not good for consumers and the like. So we shall see. Looks like fear of higher rates is pulling in demand to the real estate market. Again, this is something I told you. It's kind of counterproductive. But what I'm telling you and I've shared with you as rates, specifically the 30-year owner-occ mortgage, ticks up for a short time in real estate might be 90 days, might be 4 months. It actually pulls demand off the sidelines. Mom and dad have been looking for 6 months. They see higher rates coming. Suddenly they settle or agree on a house. And that appears to be happening already, right? We have record low inventory, so you would not expect purchases to be up week on week, but at least at the mortgage level, they are. Purchase mortgages are up up a full 2 points week on week. And again, rates went from 3.33 average to 3.52% in 7 days. That is quite the move. Just so you know, year on year, that's still down 17%. The other thing to realize is refi demand is falling. Again, I told you this. A lot of things I've been telling you are coming is coming true, which is what you would expect when you kind of look into the future, you look around corners. You're not always right, but sometimes you nail it, and this channel's been right a lot lately. Again, refi demand fell 0.1% week on week, but get this, year on year, 50%. Folks, if you are in the mortgage industry and you are a processor, you are probably not as busy. If you are in one of those big online kind of box mortgage brokers, it might be time to get nervous because, again, I believe that industry is about to shrink because you have been built on the backs of refi demand. And as I've just shared, 50% lower year on year. Pretty crazy. Jamie Dimon, someone that I watch, read, and respect, JP Morgan Chase CEO. He says that the U.S. is headed for the best economic growth in decades. He points at the American consumer. He points at jobs. I want to think he's right. I want to hope he's right. I just don't see it. At least I don't see it in the short term, right? I think I've been pretty clear. I think the next year is not going to be great. I think we could put in a floor and build from there. So if you really are talking about a decade, maybe. But I do think 2022 we have to pay for some of the sins of the past. And yeah, that's what I think. Again, Jamie Dimon plays at a level I could never aspire to, never want to. But yeah, I really don't see a very good year. If we're talking the decade, maybe. Maybe. It depends on how strong a base we put in together. Do we really bring manufacturing home? There's a lot of things that could go right that I hope go right. But yeah, Jamie, I don't see it this year, but maybe. Don't know if you saw this, but there was a crypto called Ethereum Max. No idea, not a crypto guy, but I thought it was interesting that Floyd Mayweather and Kim Kardashian have been flagged as pump and dump, providing false and misleading statements. Apparently this thing's down 97% and their names were used to pump it up. So I would expect a call from the SEC, Mr. Floyd Mayweather and Kim Kardashian. I might be wrong, but I thought Floyd was already slapped on the hand once for this. Like $500,000 fine or something he paid. I got to go look that up. I thought he was, but I don't know. I don't know what the SEC does for strike two, but I'm guessing a bigger number. Looks like Powell's testimony kind of went off as expected. Again, I don't think the market really knows what is coming. I think this is going to be very choppy. Again, raising rates, stop buying, and then the third step, start selling. An $8 trillion balance sheet needs to be unwound. The last time we tried this, which, oh, by the way, was on a much smaller balance sheet, did not go so well. So we shall see. I do expect when they start to sell that the buyers are going to demand higher rates, but we shall see. Just so you know, we got PPI tomorrow. Let's play over under together. Get your thumbs or fingers a tapping. I want to hear from you. Let's talk PPI 9.8%. Are you going to take the over or the under? And I do believe last month PPI was 9.2, I think, if memory serves. So 9.8 is a hell of a jump. I'm going to take I'll take the under. I'll take the under. But just curious what you think. Over, under. Let me know what you think. 9.8%. I got the under. We shall see. Also, Friday we start earnings. JP Morgan, Citi, Wells Fargo, Chase, things of that nature. We're going to start to see, again, what I expect from earnings. I expect most people Q4 to be awesome. The consumer was shopping. The consumer was spending. We were not going to go 2 years without a Christmas or a holiday season. So I expect Q4 earnings, generally speaking, to be good, at least on revenue. Earnings might be hurt because a lot of people were shipping goods by plane versus boats and the like. But I expect earnings to be good. Remember, the rear view mirror of earnings is backwards. I want forward projections. I believe there's going to be a lot of people talking about a soft Q1. But we'll see. It starts Friday with a lot more earnings coming next week, obviously. I didn't know this, not on my radar, but I thought I would share it. The Winter Olympics start February 4th. Man, that's like 3 weeks away or something. So shout out to all the Olympians competing for their home countries. Good luck. Be healthy. Have some fun. Make some memories. Can you imagine competing in the Olympics? How fun that would be. Also stressful. Can you imagine representing your country and some sport and you get one shot at it, the amount of stress that would cause me would, yeah, I think I'd have a lot more gray hairs. Holiday sales, as expected, were kind of what I told you was coming. They rose 9%. This is online holiday sales, rose 9% to a record 204.5 billion. This is from Adobe Analytics is the source. Couple things. First, prices were higher. Prices were higher, 3.1% higher. Again, inflation. This is the 20th month in a row online sales have been up on inflation. Prices paid with a record in November of 3.5%. Consumers saw 6 billion out of stock messages. 6 billion. That is up 10% year on year. Discounts for goods were only 8% on average this holiday season versus last. Last year, the discounts got to an average of 21%. Again, this is what I called, right? They were stirring us up, saying out of stock, buy early. So we did. We did not wait for a sale. And lo and behold, we helped retailers make a lot of money. And again, a lot of us, I think I reported a couple weeks ago, spent too much. And now you have $1,358 in extra debt. Man, we gotta stop spending on credit cards. We are seeing lots of staffing challenges in the news. Restaurants, retail, hospitals, airlines. To me, though, I want to know about the ones we can't see. Do you guys remember truckers, port workers, shipping, manufacturing operators, all of that? What's going on with those folks? You have to suspect they are also calling in sick. What is that going to be for store shelves? Are we going to be empty? What is it going to be with inflation? This is all happening and why I don't have a rosy picture for the first half of 2022. And then finally, UBS is out talking about huge, big Q4 earnings beat and stocks will take off. I would remind you that I think Q4 earnings will be awesome. Q4 earnings are looking backwards. That's your rear view mirror. I believe the earnings expectations will be less rosy. So again, we shall see. I do not have the positive thoughts on forward-looking guidance. So folks, that's what I got for you today. It is Wednesday. To catch you up on my new office, I will talk about that now. We installed high-speed internet. It's hardwired. I do have Wi-Fi, but I won't use it. It's hardwired. So hopefully that increases our performance. I've actually run it to 3 different locations so we can have different visualizations. Got my desk shipped to the house. That thing is freaking heavy, so I have to figure out a way to get it to the office. And yeah, it's coming along. I hope to be recording some videos there Friday, probably Saturday. Let's say this weekend. So I'm excited about it. I was a little nervous up front, but hey, I'm spending a couple of grand a month, so let's go have fun with it. I have no idea what I'm doing. I just want to go help more people, and I think a better background. And again, one thing I'm looking to get is a whiteboard, because that's not something that I will be doing. And yes, I have a green screen as well. I might as well trick it out, have some fun with it. So one thing, if you are in the Bay Area and you know how to do video and audio and all that stuff, I'd love to get some of your time, maybe meet you there, see what we can do. Yeah, let's have some fun with some folks. Interior designer, no, I'm already spending enough money. But yeah, if somebody wants to do it for free and give me some advice, sure. But yeah, it's going to be fun. We'll see what happens. We'll see what happens. All right, everybody, take care of yourself. It's Wednesday, so we should be speaking with Anna at 8. I have a special guest at 9. And then Matt, the mortgage guy, and I will meet later in the day, hopefully. So take care. Have fun. Bye-bye.